Hello and welcome to InvestorToday.ca. I'm your host, Dave Glover. I want to thank you for tuning into our broadcast. Joining me this week for our first interview will be David Urban. David Urban is going to commence a monthly series of discussions with us here at InvestorToday.ca. Discussions on the economy, on the markets, on the global climate in general. David Urban is an accomplished financial professional with more than 10 years of global financial markets experience, as well as 5 years experience at the C level, working for a number of global asset managers. As a contrarian investor, David eschews the traditional headlines, instead looking under the hood for information that will drive the markets in weeks and months ahead. His daily and technical and fundamental factors driving the markets can be found at www.atruecontrarian.com. Again, it's David Urban. He is a true contrarian, and welcome to the show, David.
Thank you, David. It's a pleasure to be here.
Well, I guess we can start it off, I suppose, by talking about where we have been. I know you've got a publication that's going to be coming out very shortly, and so I guess what we want to talk about first, where we are in terms of 2011 to 2012, and where do you think we find ourselves globally? What's next on the horizon?
Okay, Dave. Well, 2011 was certainly a difficult year for investors at all levels. I mean, the markets were extremely volatile. We went from highs to lows and then back again. And although things are going well now, there are some storm clouds on the horizon. And we may end up seeing 2012 being a repeat of 2011 when it's all said and done. Mm-hmm. But one of the good things is, in terms of crisis and difficulties like this, it breeds opportunity for investors. And this is what investors should be looking out for right now. Opportunities in solid blue chip stocks, gold and silver producers worldwide.
Well, let's talk about that if we can, because, 2008 occurred, and then we had this major downturn, and there still hasn't been any kind of return to the venture markets, and especially, places like the White Gold District in the Yukon, for instance, or the oil and gas exploration that's been going on. Can we talk a little bit about that? Because I know that, even though the markets have sort of crumbled beneath the feet of these companies, these, for the most part, are still very sound companies that, for the most part, have very sound projects. And, it's a shame, really, to see the markets take a company down, in some cases 70% in terms of their market value, simply because that's what the market said.
No, I agree, David. It's a real shame out there because there's a lot of value to be had in the venture sector and in the junior sectors. I mean, like you mentioned, in the Yukon region and with some of the oil and gas exploration firms, there's quite a number of juniors that have been beaten down. I mean, last year we heard a lot of talk about the risk-on, risk-off trade and how, we needed more quantitative easing. Mm-hmm. And when we didn't get that, the market unfairly treated these venture stocks as if they're overtly speculative instruments, when, in fact, they actually have a significant amount of value. Because unlike the internet bubble that popped back in 2000, when those companies went bankrupt and when the market dried up, you found out that really the assets on the balance sheet weren't worth that much. But in terms of gold, silver, oil, and gas exploration firms, they own the assets in the ground. And that's a significant difference. Exactly. Because you can put a tangible value on the assets in the ground, and that is a tangible asset on the balance sheet of most firms.
Mm-hmm. Well, yeah, exactly. And what we're seeing is companies with solid projects, with really good foundations, good management. I mean, what is it they say? Good management, good project means good investment, And it seems to me that the first two legs of that stool have been just kicked out from under everybody. And it's just simply a matter of the market.
No, I agree. 100%. There's quite a number of companies. They have very sound managements. They have very sound projects. But unfortunately, the market is they're unfairly discounting a lot of the news that's out there and thinking that, it's not going to get any better for them. They're going to have, trouble doing financing, when in reality, I think in a lot of cases, it's really not the case. And, there's a tremendous amount of value here. If I was worried about anything, I would be worried about somebody that was, going out and massively diluting a stock. And one of the good points now is you're not going to see a lot of massive dilutions. I mean, you may see some cutbacks on capital budgets for 2012 in terms of drilling, but I think what you'll see is managements won't be very aggressive with drilling. What they will do is they will be very conservative. They'll make sure to prove out what they have. And in the end, it'll create a tremendous amount of value for investors. Mm-hmm. And if you remember, back in 2009, 2010, we saw the junior sector take off, and I think we're right on the verge of have that happening again.
Right. Well, there are a few stocks out there right now that are taking off, and I know when you and I spoke earlier in the week, we talked about the fact that there are a number of stocks, particularly in the oil and gas industry, that are in fact paying dividends.
Oh, yes, definitely. I mean, the market hit a number of the oil and gas stocks back in, I think it was 2008, 2009, when they converted from a trust to a corporation in Canada. Mm-hmm. And there's quite a number of stocks that never cut their dividends. And if you look at a couple of those stocks, you'll find that, as an investor, you can pick up a sound oil and gas stock yielding 5 or 6%. And in this sort of a market, to have a stock in your portfolio that yields 5 or 6% puts a floor underneath the stock, for one, and for two, it gives you a nice return that you don't have to worry about that stock on a daily basis. I mean, it could drop 10%, but you're sitting there saying to yourself, you know what, I'm still getting that dividend check. Mm-hmm. And I still see that show up in my account every month, and it creates values that literally, for an investor in these volatile times, you can sit back and almost forget about that stock.
Right. Well, are there any companies that come to mind for you, David? Anything that you want to pass on maybe to the listeners?
Well, there's one stock in particular that I love, and I've held the stock since it was a trust, and it's called Crescent Point Energy. Mm-hmm. And I'm sure a number of investors out there have heard about the Bakken Formation, especially if you're in the U.S. You've heard about the oil boom in North Dakota and Montana, right, and how, there's all this oil and gas up in North Dakota now, and, it's a bull market in oil in North Dakota. Well, you know what? They own the Bakken Formation, or a good portion of it, on the northern side of the border, on the Canadian side of the border. And they've been pumping out oil for quite a number of years. They're growing production on a slow but steady rate. They're expanding their asset base into Alberta. And the stock yields 6%. And to be honest, half the time when I look at my portfolio, I forget that it's even there. But I know that every month I get that 6% dividend yield. I get that little bit of a dividend every month, and it's a nice counterbalance to all of the volatility.
Right. Well, again, so that's just one of a myriad of companies that are out there right now that are obviously being affected by the economic downturn and the markets in general. But it's still, as you said, providing a dividend on a regular basis.
True, and that dividend yield, it really helps to put you at ease. When you can sit there and you can say, well, you know what, I've got a nice oil and gas stock. It's yielding 4, 5, 6%. I don't have to worry so much. I don't have to worry about the market volatility. I'm getting that dividend check every month, and I feel safe and secure in my investments. And in this time when there's so much volatility, there's so much uncertainty in the global economy, you want to be in a sound, safe investment. You want to be in something that, gives you that sort of comfort level at the end of the day. Mm-hmm. And it's not to say junior stocks aren't attractive, because I think there's a tremendous amount of value in junior sector. But when you look at your overall portfolio and diversification, it's to have a couple of stocks that are safe, secure, and give you that dividend that you don't have to worry about on a monthly basis. And then you can take that dividend and you can sit there and say to yourself, you know what? This venture stock's been beaten down. They're selling for a market cap less than the cash on the balance sheet. Mm-hmm. So in essence, the market's valuing the deposit at 0 or less than 0. Maybe I'll buy a little bit of this. Maybe it's down 70%. You know what? there's value here. I can take my dividend and I can invest it in a little bit of the junior stocks, and I can expand my risk portfolio while diversifying.
Absolutely. Well, you know what? You alluded to this a couple of times in your response there, but let's talk about the effect of the sovereign debt crisis. Excuse me, as it affects the overall global market. I mean, in your most recent report, you indicate that the U.S. and North America is walking a tightrope at this point, and this obviously has to do with the sovereign debt crisis, but it also has to do with one thing that people will surely agree with, and that is a clear lack of leadership at all levels of government. Can we talk about that, David?
Oh, certainly. I think that, when you look at the dialogue that's emanating, especially from Washington, D.C. in the United States, I mean, it has just been horrible in terms of actually getting anything done. And I don't mean to really knock on the U.S. Congress that much, but when you look back over the past 2 years, when the Tea Party was elected in 2010, we expected, all these changes are going to happen. We're going to get spending under control. And what we saw is that actually nothing got done within the last 2 years. Right. The super committee couldn't come to an agreement to cut, money out of the budget. And the most well-known piece of legislation was they made pizza a vegetable. So, it really is mind-boggling that, it's taking so long to it's really just taking so long to finish the necessary steps to get the economic houses and the sovereign houses in order. And we're seeing that in Europe right now. And this economic uncertainty, what it does is it filters back into the business community, and businesses are afraid to expand. They're afraid to make capital investments because they sit there and they say to themselves, well, if they can't get their house in order in the political capital, how am I supposed to properly manage my business? If I don't know if my taxes are going to go up, how am I supposed to plan for that? How am I supposed to plan for additional regulations? I mean, businesses out there are looking for certainty. Mm-hmm. They're looking for leadership. And what we're unfortunately getting from the U.S. and Europe is really no leadership whatsoever. And it boggles my mind that it seems as though both sides of the aisle, on the conservative side and on the liberal sides, we seem to be growing apart at a time when we really should be getting together. The sovereign debt crisis, that this world faces is enormous, and people, I don't think our leadership has really grasped how important this is. Mm-hmm. And I think they're looking right now at the entrenched interests that they have, the pensions, everything in that nature, and what they're forgetting is, we have constituents that elected us, we have businesses that are looking for leadership. They want to see concise policies, they want to see stable government, they want to see, they want to see somebody step up, step to the mantle and say, all right, this is what we have to do to get by the sovereign debt crisis. This is what we have to do to get our house in order. And, Canada went through this back in the mid-'90s.
That's right.
When there was the debt crisis. Mm-hmm. And it took a lot of shared sacrifice between not just the government, but the populace as well. But if you look at the Canada that's emerged since then, it's been on a much stronger base than the rest of the world. Now, I know economic growth hasn't been, particularly strong, but one good thing is the banking sector survived the 2008 crisis in much, much better shape than the rest of the world.
Yeah, virtually intact, really.
Exactly. And I think that's something that Europe and the U.S. need to learn that lesson. Mm-hmm. And it was a bitter pill for Canada to swallow back in the mid-'90s. But right now, Canada's in much better shape for it. And I think you can thank the leadership back then for that.
Well, exactly. And yet, there were a number of people who were not happy with what was going on back then, the austerity measures, if you will. And I mean, by modern global standards, the austerity measures that we had to go through were really nothing compared to what the other countries, especially in Europe, are going to have to go through in order to get their house in order. But it seems to me that when it comes to the sovereign debt crisis, that everyone else seems to be waiting for the other shoe to drop. And so you've got a large pool of people who are just sitting on their cash. They're not investing it in their companies. They're not hiring people. They're just waiting to see what direction it's going to go. And if it doesn't go in the direction they want to, then they're just going to continue to sit on their cash.
No, I agree. And I think that we're seeing that in the markets right now. And that comes back to that, and that's the uncertainty that we're seeing emanating from the political capitals and how it filters down into the business community. It makes businesses want to hoard cash. They're afraid of making those capital investments. They're afraid of hiring additional staff because they realize that the extra and added expenses comes out of profit. And if I don't believe that my sales are going to increase or that I think my taxes are going to go up, then I have to wonder, am I going to want to hire somebody else? Do I really need to hire somebody else? Is it cheaper for me to, pay this person a couple of hours overtime rather than adding, an additional full-time position? And I think that businesses, right now they're sitting on a ton of cash. And I think that in the next, it's hard for me to scope this out over a longer term, but I think that it's almost like being sick. I mean, we know that nobody likes being sick. Nobody wants to be, ill. Mm-hmm. And the problem is right now the global economy is still ill. And we have people standing around us, which is the government, and they're telling us, oh, you're going to be okay, you're going to be okay, you're going to be okay. Mm-hmm. But they're not giving us the right medicine. So we're actually getting a little sicker. What we need to do is just to get this sickness out of our system. Be it sovereign debt crisis, be it, austerity, something to get us over that hump. And I think once we get over that hump and people start to feel better about themselves because they realize that, this crisis that we've been staring at and staring in the face for the last 2 years is now behind us and we're moving forward, you'll see businesses start to put that cash to work. But what you can do as an investor, if you have that money, you see the crisis, look for opportunities. Like I mentioned, Crescent Point Energy yielding 6%. Mm-hmm. How does a $10 billion oil producer yield 6% in one of the hottest areas of oil and gas exploration and production? There's tremendous values out there for investors if they're willing to do the homework, if they're willing to do the due diligence, and I think that's the key. Is to dig in, get your hands a little dirty, and look for those values out there in the market.
Right. Well, it's election time down in the United States right now. People are going to be electing Congress, and of course they're choosing a new president at this time around. Now, you mentioned the Tea Party movement during the last election and what people thought was going to be an overwhelming change. We have since then seen the Occupy Wall Street movement sort of going viral around the world. And not really getting any traction because of a lack of a clear message, I guess, is probably what the media has been going on. But what would you consider a real motivator to get people involved and to get people back into the process?
Well, I think politicians like Ron Paul, whether you like his message or not, are doing a lot of good for the political process. Mm-hmm. Now, there are questions about some of the stuff from his past. But if you listen to some of the speeches that he's given and the publicity that the media has given to him, he said, I realize I'm not going to win, but the important thing here for me is to get young people involved in the political process. He's trying to bring young people in so that they can get involved, so that they can make the necessary changes, so that they can ask the tough questions that are out there. And one of the things with the Occupy movement, and people thought that, it's just a bunch of, people that had English degrees and they couldn't get a job after college. Mm-hmm. No, it's something that's a little bit deeper than that. And the young people today, the ones that are in their early 20s, are beginning to come to a realization that their generation might be the first generation in a very long time that is not as well off as their parents. Right. And I think that's what they're angry at, and that's what they're lashing out at right now. It's not the poet that doesn't have a job. It's I don't believe that I am going to have a better future than my parents. I don't believe that, what's going on right now in terms of the sovereign debt crisis, in terms of the political stagnation, the lack of leadership. They don't believe in a bright future for themselves.
Well, no, we're talking about the 9/11 generation. We're talking about the first generation, I think, in recent memory anyway, that have been truly affected by forces beyond their control, namely global or international global terrorism. They have been subsequently forced to swallow, in the United States anyway, a Patriot Act. And in Canada, we've had some security actions implemented here as well to try and curb so-called terrorist activities. But I mean, you're looking at a generation, my son is part of that generation, that really there's not a lot of hope out there from what they can see.
No, and I think, and that also goes back to the unrest that happened in North Africa and across the Middle East in the spring. I mean, it really came down to a lot of young people that were looking at their future that, maybe they went to Europe to get an education and they came back home after they got the degree and they found that there's no jobs here. What's my future? Where am I going to work? How am I going to support myself? I'm in my mid-20s. I'm still living with my parents. I've got this degree. I can't use it for anything. And there's a frustration that's, lashing out. And, it's a difficult pill to swallow, but sovereign governments need to get on the ball and really start creating jobs. They really need to get focused on their constituents. They need to get away from the brilliant political dialogue that has constrained the political processes over the last few years, and they need to focus on job creation. Because once you focus on job creation and you start creating jobs, you start giving the young people a hope for their future. Right. About 5 or 6 years ago, I spent some time in China, and one of the political leaders, he said something to me that sort of kind of stuck with me. He said, the important thing for us is, it's job creation. He goes, we have to watch out for political unrest because we realize that when the communist revolution came, he goes, it was started by farmers. It was started by people that did not believe they had a bright future. And he goes, we have to watch for that. We have to create jobs for our people. And if we can create jobs, we can create, and, they end up having a home, they feel secure in their future. They're, they have something to wake up to in the morning, and they have something to look forward to. And he said, he's saying the key really is to give people hope. And I thought that was a brilliant message, and that is true. You want people to have hope for the future, especially the young people, because in 10, 15, 20 years, they'll start to move into the political positions. They'll start to move into the managerial positions. And you want them to have the confidence that they're going to move forward and succeed. You don't want them to have that confidence that, things are, I'm unsure of the world. I don't know what's going to happen. You want them to be secure and you want them to be confident.
No, you're absolutely right. I mean, and we're dealing with something that it's been the elephant in the room for the last 20 years or so. I mean, when we are now sort of the quintessential consumer society, and that's built on the backs of American workers and Canadian workers who were strong in manufacturing, who were producing the goods that we are buying. And we've moved away from that thanks to a number of trade deals that have been signed globally, where now products are being manufactured abroad. They're not, there's no more pride in America. Made in America used to mean something, and I don't know that it still means what it meant. To be made in Canada used to mean something, but I don't think that means what it meant before either. So now you've got this consumer society, but nobody's working. And how do you maintain a consumer society when no one has any money to consume anything?
Right. I mean, the whole last decade it was all consumerism, but it was consumerism built on debt.
Exactly.
So it wasn't built on a strong table. It was really built, it was almost like it was built on a table with 4 balsa wood legs. And once you accumulated enough stuff, the table collapsed. Exactly. And that's what we're seeing. And it's it's strange.
Prosperity is what you're talking about.
Exactly. It was a false prosperity. Because you don't spend your way into prosperity, you save your way into prosperity.
That's right.
And when you look at people that are considered rich, they didn't get rich by spending; they got rich by saving. So it's a lesson that I don't think we've learned yet in the United States. We're still trying to inflate spending. We're trying to get people to spend again and to be more consumerist.
Right.
But that's really not the right track we should be taking. We should be talking more about savings, and that's one of the things that's impressed me about Canada is, I've been impressed really since 2008 with the way governments handled it. Okay, there have been some missteps, but I remember when I was up there in 2009, 2010, how there were actually conversations about debt levels being too high for people and how it's good to save money and to pay down debt.
Right.
In the United States, it was the exact opposite. It was, okay, you know what? I can give you a loan for this $400,000 house. I can make it a $500,000 loan. Don't worry about how much you're going to have to pay. Don't worry about the interest rate because it always goes up 10 to 15% a year. In 3 or 4 years, you'll be able to flip it and make 10%. No big deal. It's a total 180
right.
from what I hear when I come up to Toronto and to Canada.
Right.
And in Canada, it's about it isn't about hunkering down, but it's about living within your means.
Well, I think what you referred to in terms of what we went through in the 1990s when we had to do this debt reanalysis, debt analysis rather, a reevaluation of where we were financially as a country. At that same time, consumers and Canadians in general were forced to, as well as the government, look at ways in which we can save our money and keep ourselves out of debt. But let's look at another aspect of that, David. I mean, during that time period in Canada, we were considered the safe place, and nobody wanted to spend any money. Oh, Canadians just play it safe. They don't have any entrepreneurial spirit. They're not willing to take a risk. And here we are now 20 years later, and because we weren't willing to take a risk, and because we were that stable, steady Freddy, all of a sudden everyone in the world's going, wow, how did you guys manage to pull that off?
No, I agree totally. And, it's an irony that Canada was looked at that steady Freddy, and they're like, oh, they're boring. They're not, consumerist.
That's right.
But in the long run, it's worked out better. And I know it may not seem that way at times, but reality, I'm living in an area right now of Pennsylvania that's considered economically depressed. We've seen no income growth here for the past 25 to 30 years. Housing prices have not gone up. Population has aged. There's been no job creation. And in fact, I have friends who bought houses, 15 years ago, and they're worth less today than they were back then.
Right.
And that, it's just that there was no income improvement. There was no, personal income. There was no there was no disposable income improvement. There was no, there were no gains here, and housing prices just stagnated. And the United States is really in this sort of it's a mess because we have yet to learn to live within our means. We're struggling. We're being dragged kicking and screaming towards the table of austerity.
Right. And
it's almost like we refuse to acknowledge that message. We're still trying to, be that consumerist society of, 6, 7, 8 years ago.
Well,
but,
is it really austerity that we're talking about, though, or are we just talking about living within our means, about, not necessarily putting anything away for a rainy day? But, when one thinks of austerity, they're thinking of cuts in services or cuts in programs or government increasing taxes but reducing what you receive in response to those tax dollars. But what we're really trying to talk about is accepting responsibility for your own behavior. And that's really what consumerism comes down to, isn't it?
Oh, exactly. I agree 100%. And when I mentioned about the U.S. being dragged kicking and screaming to austerity, it's because we haven't learned the lessons of living within our means.
Right.
At the political level, at the federal level, at the state level, and even at the local levels. We haven't learned the lesson to live within our means. So what ends up happening is when we get to that tipping point, we end up getting dragged back to the table. And all of a sudden we're being forced into austerity, and then we're saying, no, I can't do that.
Right. Well,
we don't,
if we can take a lesson from any time and place right now, especially as we look at ourselves as consumers, but we still want to consider ourselves as responsible consumers, we can look back maybe 2 generations to our parents or our grandparents and see, back in the 50s and 60s, before the time of, and I'm going to quote good times right now, but before that time of easy credit ripoffs, if you will, if you wanted something, you had to have the money to at least put a substantial down payment on the layaway, and you didn't get that product in your living room like a new television or furniture until that layaway was paid for. And that's, that's something that my grandparents would have done, and even my parents in the early years when I was a young child, before the days of easy credit, when you had to have a significant amount of a down payment. Nowadays, you can there's no money down all over the place.
Right, and that's been a big problem here in the U.S. We're still trying to be that consumerist society, and the belief that we're going to solve all of our problems through additional debt, when in reality that's not the case. And you're exactly right. You go back to the 70s, and with good times, you had to have the money in your pocket before you bought it.
Right.
And I think in a way we need to get back to that. We need to get back to the idea of, living within our means, at least in the U.S.
Well, and cash consumerism, not credit consumerism. If you want to buy something, go for it. But, let's put some cash down.
Exactly. I agree 100%.
So for 2012, and I don't want to rush this, but for 2012, let's talk about what we're looking forward to then. Obviously we're gonna start reevaluating how our spending is done, and we really want to look at cash spending. But we also want to perhaps look at some of those venture markets and some of those junior exploration and junior market companies that are still holding their own, and at the same time, maybe we want to think about how we can. And I don't want to just throw this out there, but I really think that we should start speaking a little more positively about the direction we're traveling in. We know from past experience that if you say recession long enough, eventually you're in a recession. But if you say recovery long enough, it's as though you're yelling into a vacant space. Nobody seems to hear the word recovery.
No, I agree. And my blog's been a little bit on the negative side, and my 2012 commentary is a little bit on the negative side with the recession. But I see opportunity, and in the last couple of days we found out that Singapore's entered a recession. Mm-hmm. We found that not entered a recession, but they've had some significant volatility in terms of GDP numbers coming out. Germany just announced that their fourth quarter GDP was slightly negative by 0.25%. Mm-hmm. And in some ways, the talk out there has been negative, but I think it's going to turn positive. I think we're going to have a very difficult year, and this year is going to start out good. And then I think we're going to start to see things go off the rails, and we're going to have some problems. But around, I would say probably mid to late March, we'll start to turn down. And then later on this year, we will start to see a recovery. I think that we're eventually going to get to that recovery. Mm-hmm. The key, though, is going to be just getting this just admitting the fact that we're sick, getting it behind us, right, so that we can look forward to a bright future. And as long as we have this, specter of recession staring us in the face, it's going to be there. And I think what we've got to do is we've just got to get behind it. We've got to say, okay, we've made our mistakes. Now it's time to move forward. The only question is whether we're going to have that political will to make those sort of statements.
Well, I think that's what concerns me. It's definitely time for what I would like to refer to as an international global market intervention. Let's call it an intervention, David, because what's the first thing about a recovery from addiction? You have to admit you have a problem.
Exactly.
And I'm not saying that the world should be on a 12-step program like AA, but we need to admit that we have a problem. That problem is easy credit and the thirst, desire, and hunger for easy credit. We've become a society where people say, there might be something here I need to want. And we need to go back to a society that says, do I need this? When you're standing at the store, or when you're standing talking to your broker on the telephone, or you're looking on the internet and you're thinking about investing in something, you have to look at it from all sides, not just what I'm going to gain from this, but can I really afford to do this? Is this someplace where I can park my money without worrying about it? And we need to admit the problem, and then we can move forward. And that's what we think. That's what I think. I think it's time for an interventionist mentality, if you will, because the first road to recovery is admitting you have a problem, right?
Right. I agree, Dave. And that's an important point. And we have to admit that we've got this problem. Mm-hmm. And once we admit we have it, then we can start taking the necessary steps to move forward. Right. But until we admit we have that problem, it's going to be difficult to get that problem behind us. Right. And for investors, look at this as opportunity. I mean, like I mentioned, with Crescent Point, a 6% dividend yield. That provides a floor for your investments. I mean, you can look at gold mining stocks like a Newmont Mining that, has that gold price-linked dividend. Mm-hmm. And granted, okay, the dividend's going to be smaller for the first quarter because of the crash in the gold price. But if you look at the price of the stock, that gold price-linked dividend has put a floor underneath the stock price. Mm-hmm. And it hasn't been as volatile as some of the other mining stocks. And I think that's the key for investors. If they take the time to do their homework, look at some of the large blue chips. I mean, dare I say, maybe even consider some of the Canadian banks if you can really do your due diligence and find out, your potential European and Asian exposures. Mm-hmm. You can pick up some very nice dividend yields because they're still making a lot of money, in fact, money hand over fist off of the Canadian market, and they're paying that back to investors in terms of dividends. And you can use those dividends as a shelter. You can use that as kind of a buffer in the event of a market downturn. And you can look out there to other blue chip stocks, like maybe a Johnson & Johnson in the United States or mm-hmm. some of the other pharmaceutical firms that are paying very good dividends. I mean, I think in fact General Electric has raised their dividend twice within the last year. And I believe the stock right now is yielding over 3.5%. So there's a lot of values out there if investors are willing to be patient, willing to do their homework, mm-hmm. and willing to
term too, right?
Exactly, think for the long term, and then take a little bit of that dividend if you've got a very high yielding portfolio, and you can take some of that money and then look at the junior sector, look at the venture sector. Say to yourself, hey, here's a great little gold deposit. They've got 3 million ounces in the ground and they're selling for less than cash on the balance sheet. Mm-hmm. Maybe I can put a little bit of cash in there just as a speculative investment. I mean, the stock's been really beaten down. It looks good. They've got a quality management. They've got a good deposit. You know what? I'll put some money down here. When the market turns, that'll be one of the stocks to move. And I think an important point to mention about the venture sector as well is you're looking at the majors coming down into the junior sector because the prices have been beaten down mm-hmm. and are now taking stakes in juniors. Right. They see that as the value. And I think that's important. Rather than going out and paying up for a producer, what they're doing is they're skipping the mid-tier producers and they're going right down to the junior level and saying, you know what, I'll pick up 10% of this company for, cash on the balance sheet. Mm-hmm. And they see that as the true value. They see that as value in the gold sector. So, I certainly look at some of the juniors down I would certainly look at some of the stocks down in the junior sector as well in the venture areas.
Mm-hmm. Well, there are a number of areas of play, and I mean, I want to remind the listeners as well that the world is getting smaller, and it is a lot more than just Western Europe, North America, and the Pacific Rim. I mean, Turkey's doing very well right now during this economy. There's parts of Africa that are doing great. If you want to go to Tanzania, there's some incredible projects happening over there. So the world isn't just Europe, the United States, and China. It's the rest of the world as well. And it's primarily the Western governments, these where the sovereign debt crisis really is looming. And if you want to look outside the fishbowl, as it were, there are a number of other places that people can invest their money.
No, that's correct. That's correct. And just as a point about getting outside the fishbowl and Canadian entrepreneurship, I mean, look at all of the mining stocks that have started up within the last 10 years. Mm-hmm. Out of Canada. I mean, how many have been investing, outside of the safe, Canadian comfort zone? I mean, it's easy to say, I'll pick up something maybe in the Val d'Or area. But you know what? There's been a lot of Canadian companies that have looked outside of that comfort zone and have done well. And I think that is a testament to, Canada and the Canadian people, that, there is that entrepreneurship there.
Well, and that's totally valid. I want to thank you, David. I want to thank you for spending your time with us. It's very valuable. I know you're a very busy man. I want to thank the viewers for tuning in to InvestorToday.ca. On the line with me has been David Urban. He is a true contrarian, and you can check him out at www.atruecontrarian.com. He's got some incredible insight. He's got many years' experience in the markets. So for a fresher approach and a fresher look maybe to the other doom and gloom that's going on out there, as far as 2012 is concerned, our prediction is we're going to see a slow start, maybe a little bit of a continuation of what we saw in 2011. But if we can build that momentum and continue to be faithful and believe in the ability of the markets to correct itself and get over this addiction to easy credit, then 2012 it should be the beginning of another great bull run.
Well, and thank you for your time. Thank you for the opportunity here. Investors want to contact me or have further questions, they can either do it through the InvestorToday.ca website or RBL Communications.
Excellent. And we hope to have you here next month again, David. We want to make David Urban a regular contributor here to InvestorToday.ca. And we're going to talk about the global markets, the global economy, and just how things are going in general. Thanks again, David. Thanks for being here.
Thank you, David. It's been a pleasure.
And we'll talk to you again next time. Thanks for tuning in, listeners. We'll see you next time here at InvestorToday.ca.